everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are several things to pay attention to for the upcoming trading week. Now, before we get to that, we have 1 day left for the month of July. And so far, the S&P, the NASDAQ, the Russell, the Dow, gold, silver, all posting significant gains for the month of July. Now, if we get a horrible, atrocious Monday, the 31st, maybe it'll be negative for the month, but it looks like it's going to be pretty good. And honestly, the S&P and the NASDAQ, 5 consecutive months of gains, looking pretty hot at this moment in time. So what's going to keep this thing moving forward? Well, why not take a peek at earnings? That's going to be our next big piece to look at. We have a lot of companies reporting earnings this week, 1,623 to be precise. We start things off on Monday with Western Digital, Arista Networks, ON Semiconductor, and Diamondback Energy. Tuesday brings you AMD, Pfizer, Caterpillar, Philip Morris, Starbucks, Merck, Chesapeake Energy, and there are many, many more. When we start to get to Tuesday, Wednesday, Thursday, you're talking 500-600 different companies reporting per day. So please make sure you look at your earnings calendar because there's a lot more than what I'm showing you here. I just don't have space to show that many. On Wednesday, you got CVS, Qualcomm, PayPal, Energy Transfer Partners, Kraft Heinz, and Shopify. And then the big daddy. Thursday is the big day, probably the biggest of this earnings season. Why? Because you got a double whammy of monster NASDAQ components, Apple and Amazon reporting. Also Alibaba, you've got Square or Block, Gilead Scientific, and ConocoPhillips. So Thursday afternoon, after market close, is going to be a big day, and that means Friday's session, not with the earnings announcements like Berkshire Hathaway, Dominion Energy, and Enbridge, but with the results from Apple and Amazon causing all kinds of waves. We saw it last week when we had Microsoft report. There were some pretty big swings there with Google as well. So keep your eye on that Thursday night earnings announcement. Sit back, watch that come out, and then Friday should be a lot of fireworks. Okay. So what's driving all this? Rates, interest rates to be precise. Now we had Jerome Powell last week on Wednesday raise 25 basis points, and there's so much speculation right now about what are they going to do going forward. Many people feel that they're going to pause. Well, that's the odds-on favorite at the moment of this recording. It's about a 75 to 80% chance that we're going to see a pause at the next meeting, but that means there's some people that believe we're going to be going higher, and there might be one or two out there that think we're going to cut. Probably not going to cut yet, but we'll see what happens with that rate announcement at our next FOMC meeting. What I can tell you is that other banks around the world are watching us, and they have some rate announcements coming out. Specifically, we have the Reserve Bank of Australia reporting on Monday. That's going to be just after the stroke of midnight Eastern Time, 12:30 to be precise. They're expected to raise 25 basis points from 4.1% to 4.35%. And we have another one across the pond as well. The Bank of England is looking to raise 25 basis points from 5% to 5.25%. That will be Thursday at 7 a.m. Eastern Time. Now, as we look at this economic data and understand kind of where we're headed, again, the dual mandate from the Fed is full employment and stable prices. Well, inflation's coming down, so they're working on the stable prices part. What about full employment? And what exactly is full employment? Well, good news is we have some jobs data coming out. Actually, I think there's 4 or 5 pieces of jobs data coming out this week, and all of which could have an impact on our markets. Let's start things off at the top of the list here with JOLTS job openings. That's Tuesday at 10 a.m. Eastern Time. Move forward to Wednesday at 8:15 a.m. Eastern Time. You have ADP non-farm employment change. On Thursday at 8:30, unemployment claims. And then the big daddy on Friday, you're looking at the unemployment rate at 8:30 a.m. Eastern Time. Now, almost all of these, except for the JOLTS job openings, come out before the market opens. So keep your eye on that and see how those might impact the market on that specific trading day. They could cause a lot of volatility, specifically the Friday session. So what does the unemployment data look like? Well, from that peak in 2020 when we had the COVID pandemic going on, unemployment significantly higher, and we've been dropping ever since. Although the good news is we have flatlined here, and flatlining may be a good or bad thing, right? We don't know. When we put into context of where we are historically, 3.6% unemployment is historically low. We are in a great spot with regards to the unemployment rate. So this is important. Again, the Fed has a dual mandate, full employment and control prices. Well, this is a good sign that the Fed's policies and actions have been working. Now, we have this discussion about what is full employment. All we really know is that Janet Yellen and Ben Bernanke were targeting 5.5% as being full employment for the United States. Well, if 5.5% is full employment, according to the Fed, and we are now at 3.6, we're in a very good position, which means we could probably expect unemployment to rise a little bit here before anybody really bats an eye at it. So a lot of pretty important news. You have some significant earnings, particularly Thursday night going into your Friday session. Then you also have the unemployment claims on Friday. You've got 2 rate announcements, so it's going to be a fun and wild week out there with lots of volatility. That, my friends, is your Monday Morning Must Knows. We'll see you next week.